Welcome everyone to today's webinar. Charles Heuring here with IAMS Wealth Management. Give people a few more minutes to kind of trickle in. I know we're close to 10 o'clock here on the dot, but as we wait here, I just want to first say, thank you for taking time this morning to join me. I know we are certainly in kind of unprecedented times. Whether you're watching this live or on a recording, on April 15th, it's kind of surreal to see what all is going on in the world around us. And obviously, first and foremost, I just want to hope everyone out there is safe and healthy and getting through this challenging time we're in. I know here personally as a firm, things are kind of working business as usual. On the wealth management side, we have a lot of our staff working remote and really haven't skipped a beat there. And company-wide, we really have kind of a bare bones staff in here at the office as we all try to combat this coronavirus and come out stronger on the other side. So I just want to lead with thanking you again for joining us, for your loyalty to IAMS, and for being a part of us as a firm. We take that as a big compliment, and we just want to make sure everyone out there is safe and healthy. So kind of, I guess, in a roundabout way, it's made a lot of these webinars even more important. I think it's a neat time to be able to kind of almost take a step back from kind of the day-to-day business where, the old saying goes, it's easy to work in your business, but it's a little harder to work on your business when you're looking at it from a big picture standpoint. And although it's easy to see a lot of the negatives of what we're going through right now, I would think the silver lining, at least, is hopefully it's giving you a chance to kind of put a pause on a lot of the day-to-day and really just evaluate where you stand as a producer, whether you're an investment advisor or not, or what kind of different things you may offer as part of your enterprise. I mean, it's a really interesting value opportunity to be able to look and see where you stand and maybe think of ways you want to grow in the months and quarters and years ahead for where things stand. So that's kind of why I thought this would be a good topic for everyone to hear today. I know on the IAMS daily webinars, a lot of times you're getting maybe a sales tactic or a product information. All that's just good and well. But I think at a time like these, thinking in a more of a big picture concept of growing your business, I think is a good thing to be evaluating during a situation like this. So everything I'm going to be talking about today really circles around the IAMS Wealth Management facet of the IAMS family. For those of you who aren't aware, IAMS Wealth Management, we are a registered investment advisory firm, federally registered with the SEC. So we do conduct business in all 50 states. What this does entail, though, is it's a next level of contracting, so to speak. It does require a securities license to do business with IAMS Wealth Management. So I know with these webinars, we tend to have kind of a diverse audience. We might have some people that are just getting into the business, just doing life, health, and annuities. We might have some people that are savvy in the business doing those same things. And then we might have someone, on the clear other end of the spectrum who's been managing securities for years and has a book of business and is just looking to maybe get a few pieces of information. So I'll try to keep it pretty broad, pretty basic today, but I just want to more convey the concepts of the value that adding securities to your business can bring. And especially at a time like this, when if you don't have a securities license, it's a pretty convenient time to maybe think about trying to study and knock that out while the rest of life is on hold a little bit. So in essence, that's what we're going to cover today. Throughout this webinar, feel free to type in any questions you might have. I'll try to get to as many of them live as I can. Otherwise, I will follow up with everyone individually too, just to make sure we're getting everyone's needs answered. And then as always too, our number at the bottom of the screen, our entire team's happy to help you. So that 800 number from 8 to 5 p.m. Central Time is going to be available for you too to get any questions answered. So without further ado, we'll kind of get rolling on the slides here today, and hopefully it will take about 30 to 40 minutes of your time as I talk to you about kind of growing your business with IAMS Wealth Management. As I get rolling, obviously, these are for professional use only. These aren't approved to be used, client-facing slides. For advisors that are with IAMS Wealth Management that might like a graphic or two in here, just let me know. We can make sure we can get that in a compliance-approved, client-facing manner for you to use with clients and appointments, things like that. So kind of painting the picture on the IAMS family. For those of you that know, insurance agency marketing services, we've been around 34 years or so, and really our bread and butter has just been, the agency space. The mantra has always been submission to commission. We help you with your policies from day one to getting paid. We have a 3-ring guarantee, and that's been our mantra for the entirety that IAMS has been around. Well, in 2016, IAMS Wealth Management came into the fold as we brought a securities division under the company umbrella. We still have that same dedication to service. We still have that same 3-ring guarantee. We have our same service standard where we call it, our proposal to payout, where we help you from the initial client appointment to actually onboarding the account and maintaining that account. We're there every step of the way to help you. So I like to touch on this slide because it's really just different offshoots of the same entity and the same values that IAMS has always had since it came to be. One thing I think that is worthwhile too to always mention is just the difference between an RIA and a broker dealer. And again, I understand I'm talking to a diverse audience, so a lot of people this might be simple. A lot of people might not know the first thing. So I always like to touch on this a little bit, just because I think there is some misconceptions out there regarding the difference between the two and similarities between the two. So in essence, whether you're affiliated with an RIA like IAMS Wealth Management or a broker dealer, really in essence, the whole function of the entity, I guess, in theory is the same. You're just offering securities to clients. How you go about doing that is kind of the difference between the two. For an RIA like IAMS Wealth Management, our primary function is advice, offering investment advice in exchange for a fee. Whereas on the broker-dealer side of things, it's typically a little bit more of a transactional-based relationship, earning kind of maybe a trading commission or something along those lines for what you're recommending. So that's a little bit of the difference between the two. I think one big difference is a lot of people think that for you to offer your clients, an individual security or a mutual fund, you need to be with a broker dealer. It's not entirely true. I mean, we have advisors that are able to purchase individual securities for clients on the IAMS Wealth side. The only difference in how you're compensated for it. It's just part of the whole managed account rather than an individual transaction-based commission, if that makes sense. So hopefully I'm explaining that fairly clearly. A big difference that a lot of people like to think of too is from a regulatory and kind of client responsibility standpoint. Broker dealers are more in the world of FINRA. I think a lot of people in the securities world obviously know who FINRA is. They're kind of the regulatory authority for broker dealers, whereas RIAs like IAMS Wealth Management, we actually fall under the supervision of the SEC, the Securities and Exchange Commission. So the second kind of layer of that, though, is that our supervision comes directly from the SEC. So that's who we report to. Any advisor with IAMS Wealth Management then reports to us as a firm in our home office. So our responsibility is to oversee all of our individual advisors, and then our oversight comes from the SEC. So it's kind of a nice a tier there. A lot of people like that difference in kind of the compliance and regulatory liability from that point of view. So moving on, just to give you kind of a scope of what IAMS Wealth Management is, we currently stand at 42 advisors strong, and I like to update this map just to give everyone a sense of where our kind of geographic footprint is. We currently are managing over 70 million of assets under advisement, and that's throughout these 42 advisors across the United States. So that gives you a sense of kind of where we sit as a firm. And as people ask me, what is the importance of investment advice or what value am I bringing to clients? I could do a whole webinar just honestly talking about that, but I think the important thing for those of you who maybe aren't offering securities to kind of think about why it might be of value to add them, I like going through this slide. The future ain't what it used to be. As time goes on, the average life expectancy just keeps growing. And you got to think that beyond just the obvious ramifications of that, what is that meaning for all these various other facets for retirement planning, with people living longer? How are we going to manage that from a financial standpoint? Estate planning, as you're trying to pass things on from generation to generation, we're going to get to a point where there could be 3 to 4 to even 5 generations alive at the same time. Estate planning is going to become more and more prevalent. Tax planning, how are you investing to optimize your tax efficiency for that longer retirement, for that estate you're planning? And then college planning, I've even read different articles saying that as life expectancy keeps growing to 80 to 90 and plus, the stuff that people are learning in college when they're 20 might not be prevalent. It might be obsolete by the time they're 60. There could be a second wave of education. And again, that's just one person's thought. I'm not saying that's going to be the case, but that could be something just to keep in mind. So in essence, really the crux of the issue though is that client needs are evolving. The industry as a whole is evolving. And I think it's smart for your business too as well. So If you're here listening to this webinar, you've obviously thought about how you might want your business to evolve. So that's what we're going to talk about today. So growing your business. Our goals for each individual advisor with us are kind of these threefold goals. They kind of fold into one another, but I think they are especially key during moments like this that we're going through right now with kind of a more shelter-in-place society. Number one, increase revenue. This can come in a multitude of ways. I think obviously the most obvious one is the fact that you'll be able to do some additional business. You'll be able to handle securities for your clients in addition to the existing business that you're already doing on the annuity or life side. So it's obvious that you'll kind of gain revenue there, but it's kind of nice just because that is a recurring revenue stream. So our advisors are actually paid on a monthly basis for the assets that they're managing. So in times like these, if you're noticing that your annuity or life business is slowing down a little bit, our advisors are still getting that monthly recurring fee revenue, almost like a monthly paycheck that kind of helps you ride the ebbs and flows of the commission-based business that you're doing on the product side. So I think that's a smart way to look at it. What I've heard too from our advisors is that the thing that was eye-opening for them is they didn't actually realize how much it would help their existing business just having the ability to talk about securities. If you can talk about securities, you're suddenly a more marketable individual. You can get in front of more people. You can get in front of more higher net worth people, and then they're more likely to actually give you the breadth of their portfolio, whereas in the past, maybe you were only able to handle just the annuity or fixed portion, for example. So it's helped a lot of our advisors actually increase their product sales, which is a benefit they didn't see coming. And then lastly, at the end of the day, just having a recurring revenue part of your business as part of your business, it does increase the valuation of your company. And when the time comes to succession plan and move that on to either someone internally or sell to someone externally, you have a more marketable product that you could be offsetting, and it's going to help your value down the road. So I always like to mention all facets of just that point number one, increase revenue. Point number two that I think a lot of people overlook is just the fact that you're going to be strengthening your client relationships by being able to manage securities from a fiduciary standpoint. And what that fiduciary standpoint means is that you are obligated to act in your client's best interests. I know 99.9% of people listening and out there in the industry do that already. That's not some big to do. I think most people out there are acting as they can in the best interest of the client. But as a fiduciary, as a IAMS Wealth Management advisor, that is a badge you can actually wear with pride. That's something that through our firm, that is something that you are held to, that is a standard that you're expected to meet. And clients do kind of gravitate towards that. They understand that you are sitting on the same side of the table as them, that you are truly on their side. And when you're able to handle all aspects of their portfolio, whether they're their investments, their fixed annuities, their products, the life insurance, you really become their go-to resource. And that just bleeds you right into point number three here with improved client retention. When you become that full service advisor, you're going to keep those clients around because they'll have no reason to need to talk to a broker or someone else who might give a second opinion that might conflict with what you're trying to say. It kind of eliminates any other touch points that other brokers might have on your clients, which gives you a more manageable grasp on your clients and gives you a better chance of retaining that and keeping that relationship long term, and then ideally moving on to the next generation as those clients kind of turn over. So these are in I guess a high level look of the three things we're hoping our advisor can accomplish. And this is something as we bring a new advisor on and you ask them 6 months later, I think they would attest to all three of these being pretty on point. In a big picture, I think a lot of people might overcomplicate what investment advice might do to their business. That's probably the biggest concern I hear from someone maybe stepping into the investment advice business for the first time, is they think, oh, I don't have the time to do it. I don't have the expertise. I don't want the liability. We've really designed ourselves to really match that exact fit of someone who's just wanting to have the capability to do this, but wants to lean on a partner like IAMS to help take a lot of the necessary but time-consuming day-to-day tasks off your plate. So think of it really just from a marketing program to reach new clients. Our platform creates another tool for you to gather more assets, and our systems and our people we have in place allow you to do so without overhauling your day-to-day life. And we're going to talk about that here, some examples of that in the coming slides the rest of the time we're talking today. I like this slide though, as we're kind of going into showing the value of what investment advice can bring, just because it helps put a tangible, I guess, feel to what I know I'm explaining right now is kind of an abstract concept. This is a slide I do at all of our training academies that we do for various advisors and agents, and it really does kind of spur a lot of, I think, good thought and good conversation when you kind of see how some of this can affect what you're actually doing week to week, month to month as an agent or an advisor out in the field. So this slide is simply illustrating in 1 week time span 5 different appointments we helped our advisors with going forward, and how they actually saw the value of being an investment advisor in helping all aspects of their business. So these are actual appointments. These happen all actually in a 5-day time span, so I will attest to that. But appointment number 1, we'll just say this advisor came across this prospect of a $75,000 annuity candidate. Really pitched the sale, made the sale, business as usual. They didn't have any investable assets they wanted to put on the AUM side, but no harm done there. Still got the premium on the books and the annuities, just like you would have if you were only an agent. Appointment number 2 is where we saw our first switch in kind of the rationale there, because it's a $1.2 million prospect, a big fish, as this advisor called it. They were looking for someone to actually manage their whole book of business. And this advisor said that if I did not have the capability to actually offer investments to this client, I would have jeopardized my ability to do the annuity sale. So in essence, if they were just an agent that was looking to sell a product, they would have swung and missed there. Whereas being a fiduciary advisor, they were able to actually split that client between investments and annuity premium. It not only saved their existing business, gave them a good start to starting their AUM book of business there too. Appointment number 3 in this chart is just a $300,000 prospect, a great referral from an existing client. Was able to get half of it into an annuity for an agent. They were looking to invest the rest, and they would have chose to do it on their own. But instead, in this instance, our advisor had the ability to help them, moved half of that money over to the IAMS Wealth Management platform, and just grew AUM from there. And again, I don't want to kind of take too much time just going through these examples, but the point being of this slide is just showing you that not only does being an advisor give you an additional facet to service your clients and grow your business, it can actually help the existing business that you're already doing. And that's the purpose of this slide, just to show you the value that can add there. So hopefully that's resonated through that slide. So going into a little bit more about IAMS Wealth, I am just going to take a quick look at questions here to make sure I'm explaining everything. So give me a second to kind of catch up on these here, if you don't mind. Yeah, it looks like some people are having questions regarding kind of the study habits and what the 65 might entail. I'll save that just for the end, because that's actually probably going to bleed into a couple other points I want to address. So I will get to that, but I appreciate the questions. Keep chiming in. I'll make sure I get to as many of these as I can at the end, like I mentioned at the tip off of this webinar. But the wealth management overview, getting into some more specifics about us, I'm going to briefly talk about kind of our systems, our services, our platform, just to give you a sense of what we have to offer. And hopefully this is just a good tip of the iceberg material that gets you thinking where, hey, if you think it might be a good idea for you, let's schedule a follow-up time to discuss more intently, and you can talk with myself, our service team, our sales team, compliance, whoever you need to get the information that you're looking for to see if IAMS might be a good fit for your securities business. So we'll keep chugging right along here. I do like to lead off, just kind of talk about our business systems. People like to know, what technology comes with being with IAMS Wealth, or what does my day-to-day business look like? Well, I'll touch on that briefly here. The system actually starts with proposal software. Every advisor we have gets access to 2 different proposal softwares, Advisor World and Riskalyze. I'm sure those of you that have been in the investment world probably know at least 1 or 2 of those. But those are good tools that advisors use to actually help calculate a client's risk tolerance, turn that over to comparing it how they're currently invested versus what you could recommend to them, and kind of give you some talking points for that sales appointment you're making. We also have some advisors that don't really use proposal software, and they talk more conceptually using information on managers, or just kind of talking broadly about risk tolerance and market sectors. So there's no cookie cutter way in IAMS Wealth Management, but we just like to let you know that we do give you access to that tool. Once it gets to the point where you're actually managing your business, onboarding accounts, trading accounts, things of that nature, we have technology that's called Elements, which is actually your single cohesive business management tool. And it's neat because advisors that we bring on that are used to having, a CRM over here, a proposal software over here, a trading platform over here, a reporting software over here, and having different logins, different credentials, passwords, it can get to be a little bit cumbersome. Through our software, you're able to do that all from one login. So a lot of people like the simplicity that that brings, and all it's going to do is make you a little bit more efficient, which is going to allow you either more time to have that free time that you don't have now, or double down on growing your business. And that's kind of the reason for the tool we have there. As far as client-facing systems go, every advisor with IAMS Wealth Management gets a website included with being an advisor with us, just because we think it's important to have an online storefront, just kind of build your credibility and brand. You also get access to a account portal that your clients can log into that do update on a daily basis, so they can see their account value with their accounts with you. And it's nice because it's branded at your level, the same way your website is. We have a few advisors that do use, the IAMS Wealth Management brand, but we do have a majority of our advisors that are using their own personal brand that they spent time building. And we just kind of add a little bit new of a twist to that with the investment standpoint. So your clients would log in, they'll see your headshot, your contact information, your logo and color scheme, and it really just goes, again, the next step of building your credibility as someone they can lean on for their entire portfolio. And that kind of leads me right to my next point, that this login actually does have the ability to bring in outside assets and kind of report on those as well. So you can be the one-stop shop for your clients to go to and see their real whole financial picture. So if they have a couple bank accounts they want to link up, let's say they have a self-directed stock account they like doing their own trades in, even let's think maybe an annuity that you've written through them, or on the flip side, some liabilities, maybe a credit card they want to link up, or a mortgage they want to link up. It goes on to what they call the balance sheet. And you can see a hypothetical one I just placed in here. You can link in fluctuating assets, and what I mean by that are, in this example, you can link up a 401k, an HSA, a bank account, and that's going to change on a daily basis, and that'll automatically update here. But your clients can also add in maybe fixed assets that they have that they can manually update when the time comes. So if they want to factor in the value of their house or the value of their card, anything like that can come onto this household balance sheet, and it all sums up to that nice net worth button. And again, this is a service you're adding to them. It's going to be on your logo, your color scheme, your headshot. It's all going to be a service added that you're providing to them that really just comes as being a part with IAMS Wealth Management. So a lot of advisors like having that capability. From a support standpoint, a lot of people ask, what can I expect from a support standpoint when I join IAMS Wealth Management or I start with IAMS Wealth Management? Well, one, you get full access to our marketing and graphic design team. Jacob and Sean are great at doing what they do on the web design side and the graphic design side to really build your brand. And I've just put a couple PDFs here as an example of some of the stuff that we've created. And we do have some turnkey options, probably about 8 to 12 pieces that we could have ready for you in your first week. They're kind of boilerplate, more concept driven. But then we also do consistently do one-off projects for advisors, whether they need a mailer for a client appreciation event or a special topic, maybe market volatility, since we're in a very prevalent volatile time right now in the market, things like that. We handle those one-off requests on a daily basis too. So think of us as almost an extension of your own team with your own graphic design and marketing department. On that same note, think of us as also kind of your back office virtual assistant. We help advisors on a daily basis build out the questionnaires and investment proposals, and even getting paperwork ready for client appointments, ready to transition accounts. We can handle all of that for you. We can do as much or as little as you need us to make sure you're working at 100%. So that's kind of the responsibility our team takes there. We utilize third-party investment managers that automatically rebalance client accounts depending on the client's risk tolerance. And I'll get to our platform here in just a second. But the beauty of it here is that you're not expected to go in every single day and be trading and maintaining client accounts. I like to say that our advisors are more asset gatherers rather than asset managers. They can focus on the relationship aspect and the coaching aspect of what being an advisor means to clients, and leave the asset management to actually our third-party advisors, who that's their 5 days a week, 40 hours a week job, that's their focus. So all you're doing at the end of the day is giving your clients more experience and more credibility behind how their portfolio is being managed, and it's all done without you having to lift a finger. That's happened behind the scenes. So a lot of our advisors like that component. And same goes for billing. For anyone out there that might be listening, that's maybe your own RIA or your own investment advisor that's doing a lot of this on your own, you probably do understand how time consuming it can be sometimes when you're doing trading and billing. These are all things we do. And I mentioned at the top of the call too that this billing happens on a monthly basis and advisors get paid out on a monthly basis. So it's that nice steady revenue stream that complements your existing, commission-based business that you have. Continuing on our support, a lot of advisors say, well, this is all fine and dandy. Let's say I get that 65 pass. Well, how am I expected to learn this whole new scope of business that I've never done before? Well, that's why we have our advisor training events. We typically host one of these a quarter. As you could probably imagine right now, with shelter in place being the status quo, we're not hosting any meetings here in the coming months, but we do individual training videos where we can actually bring a network of advisors together, or even do one-on-one sessions where you're doing a screen share with a member of our team going through opening your first account or learning about the asset managers that we have, or how do I trade an account. We do those on a daily basis too. So don't think that once you get a 65, you're going to join IAMS Wealth Management and it's our expectation that you know everything you need to know and it's your job then to kind of go for it. No, your training really never ends, to be honest. We have advisors that are with us for 3+ years now, and we're still doing various coaching calls or training calls on just how to still improve business, and we like that because the industry consistently evolves and training will never end. So you get a big training partner when you're affiliated with IAMS Wealth Management. And then to that end, the last point I want to make is that you do have multiple resources. As much as I'm talking about us and IAMS right now, we have an outside compliance team that we work with. I've alluded to asset managers. We have 9 different asset managers that we work with that have their own investment committees. We have a back office operations team that's really seen a lot of different things in the industry. So if you have any question that maybe the exact team member at IAMS isn't the best fit to help you with, you have multiple resources to be at your disposal, and that's just part of being the IAMS network. Yeah, your assistance is not confined to our 4 walls here at our home office. I mean, you're really just part of that IAMS family, and we actually do have a good camaraderie between our advisors too, with idea sharing, sales topics, things like that. So it really is a cool, family dynamic, and I think anyone listening that's been to any of our events can attest to that too. So that again, I know is a brief rundown of our systems and support. Hopefully that gives you a brief overview. Everything I just talked about too is on our website, IAMSwealthmanagement.com. So if you're looking to read a little bit more in depth on any of that, or want to talk it through with me or a member of my team after this webinar, that phone number will reach us. So yeah, never hesitate to reach out with any further questions too, as well as typing those in. We are just going to touch briefly on our platform here, and then I will get to hopefully answering a few questions and wrapping up in about 10 minutes or so. So thank you all for bearing with me. So our platform, I think a lot of people, especially now, can understand that people make emotional decisions. It happens in all aspects of life, but for the basis of this conversation, it's very prevalent in investing. This is a fitting quote from Warren Buffett here in Omaha. Be fearful when others are greedy, and greedy when others are fearful. Right now, it seems like on an hourly basis, you're hearing news come out about the market, good, bad, and different. It seems like I've even noticed certain days, it seems like there's more bad news than good. The market's going up. Some days there's more good news than bad. The market's going down. It's hard to make sense of it if you look at it on a granular level. So if you're thinking that, for these investment professionals out there, how hard it is to read, just think of how much the average consumer out there is really kind of maybe anxious about what's going on, uncertain, and when anxiety and uncertainty comes in, it's easy to make emotional decisions. I think people that are doing investment advice out there can understand and attest to, especially now we've seen the last couple months of a market correction. Generally speaking, investors are loss averse rather than risk averse. And what I mean by that is if you're having an appointment the same day last year talking about one of the longest bull markets in history, clients of course are going to say they have a pretty good risk tolerance, just because, oh yeah, I can afford to lose that to maybe gain that, lose X to gain Y. But when now they're starting to get statements from their custodians of account values and seeing red numbers, and in some cases substantial red numbers, risk tolerance is taken a little bit differently when it's tangible. And it's always funny when you're talking to people, even if you're out, whether you're meeting at a coffee shop or on the golf course talking to buddies, I'm sure everyone's talked about, how much you're up percentage-wise in good years. Oh, I'm up 20% this year. I'm up 30% this year. But if you really pay attention to it, when people tend to be down, down is usually the tangible dollar value. Oh, I'm down 8,000 this year. I'm down 10,000 this quarter. It's because people are loss averse in that scenario. They actually have the tangible attachment to the single dollar value rather than the percentage of the growth. So that's kind of a neat concept to kind of think of, and as you're cultivating future client appointments. But the problem is, advisors aren't immune to this too. It is a big part of what investment advice is. It's kind of emotional coaching of your clients to get through these emotional decisions in these times. And it's easy when that's one or two clients, but it can very, very understandable if you're having 50 to 75% of your clients panicking to panic as well. So what I like to say is that we built a platform that really leans on third-party managers that really can tune out that noise and allow you to really be that emotional coach where someone behind the scenes is helping make that investment decision. And that's key because of a graph like this. And at this point, I've been using this a couple years, but it'll be nice to see an update to this chart too. But I think everyone personally can kind of understand the various emotional ebbs and flows as you kind of follow the market. Everyone knows how it's easier to buy in when you're feeling excitement or thrill, thinking that good times will never end, whereas it's easy to really sell at anxiety, fear, and getting to the red dots there when you think, oh man, this bad time will never end. And the true value is somewhere in the middle, but you can just see that it's easy to make wrong investment decisions when you're looking at it in the big picture. But in the day-to-day, it's easy to fall prey to that. And that's why I like this quote. It says, investing what is comfortable is rarely profitable. And that kind of goes back to Warren Buffett's quote too. So the last kind of conceptual chart I like to touch on before I go into our platform is this graph from one of our asset managers, First Trust. Kind of just talking about how, the natural tendency for some clients or even advisors is to go to cash in times of worry. I always coach our advisors. That's kind of a double-edged sword. Because even though you might be right in timing when you're selling, you then have to be right again on timing when you're buying, and it forces you to make two correct decisions back to back. And I think it's possible to do that. Absolutely, it is, but it's not possible to really do that with any regular confidence. So then it's really, you're taking a lot of impulse decision and kind of luck and different factors in the equation, when in reality it's best to kind of ride the ebbs and flows, make sure that accounts are balanced according to risk tolerance, and kind of see the good and the bad, and for better or worse, make sure you're doing what's best for a client without overcomplicating what you're trying to do. So this chart I think is actually really helpful from a standpoint that you can see that even in years where the declines have been substantial, 15, 20, 30%, a lot of times the year end has still been positive. I mean, you can look at 1987 for an example. If you're looking at an intra-year decline, at one point in 1987, the market was down 34%, but calendar year it was up 2%. Whereas on the flip side, if you're looking at a year like 95, 96, the biggest drawdown that year saw was 3%. It finished 34% up. So if you're, again, back to the same point, if you're looking at investment from a one-day standpoint, it's easy to get lost in kind of these emotional decisions. But the better you can do to look at longer-term trends and trying to think that patience is a better alternative than making impulse decisions on buying in and out and timing the market, you're going to be better off long term, and that's just statistically speaking. So with all of these different factors in mind, what we set out to do with our platform is, one, develop a platform that can complement insurance business, meaning not give a lot of products that won't necessarily mesh well with the typical demographic that our advisors see, which are older clientele who aren't necessarily in the accumulation phase. Maybe they're in just the retirement distribution phase. Same token, we don't want to overhaul your business. And that kind of goes back to my point earlier, is that we're not expecting advisors to be stock pickers, day traders, waking up and reading market signals and charts and trends. We want to leave that to the experts that are the third-party managers that we use, and allow you, the advisor, to do what you do best, and that's manage the client relationship and kind of be that emotional coach there as well. We did want to be able to develop a platform that is simple at its core for someone who wants to make this pretty turnkey, but also be able to be built out for those who maybe start with a turnkey approach, but slowly build their expertise as they get into year 2 and year 3 with IAMS Wealth Management and gain familiarity with kind of the investment platform that we have here. And then also develop a platform that implements a consistent plan. And that kind of goes back to the last few charts we talked about is, no one here in this Omaha office is making the day-to-day investment decisions. We lean on our third-party managers that do have their consistent plans. Now, that plan will vary depending on the manager that you use. Some might be more strategic, some might be more tactical, some might be more inherent to be risk averse, some might be more inherent to be aggressive. But at the end of the day, we have different strategies that can meet any distinct client preference. And within that preference, there's going to be a consistent plan. So you don't have any of that human emotion or bias inherently kind of maybe being an obstacle to that. So before I wrap up here, I'm just going to tie a few thoughts on just a few of our managers, just to give you a taste of what you might experience as an advisor here with IAMS Wealth Management. And we'll get to questions then here in a few minutes before we wrap up. But one of the more prevalent managers that we use is one of the charts I mentioned earlier, is First Trust. And a lot of you in the industry probably know who First Trust is. A lot of you who aren't in the industry probably don't know who First Trust is. And on both accounts, that's kind of by design. For those of you who are in the field, First Trust because they're one of the top 5 largest ETF active managers, in the industry. So if you're actively managing funds out there for clients already, you've probably seen First Trust. Whereas if you're someone who is maybe less involved with investment advice, you might not know who First Trust is just because you're not going to see their logo on the side of an arena or advertising on a basketball court, because they're not marketing to end clients. They market through advisors. So we like that because their essence is really supporting investment advisors as they support clients. And that really kind of dovetails well with our value that we try to bring at IAMS as being that support system for you to better serve clients. So First Trust has been a great partner in that. For the simple approach, they offer 5 what I call blended risk models that we'll talk about in the next slide, that really are kind of one size fits all for the 5 different segments of the investment experience. So for someone conservative, they have a conservative bundle, all the way up to someone who's aggressive, they have an aggressive bundle, where at the surface it seems very, very simple, but underneath it's being intrinsically managed within different funds, and I'll touch on that in a second. But it gives you credibility as someone who might be even taking this as a very, very simple approach. So for someone who's a little bit more experienced, they have what they call 9 focus models that advisors have the ability to kind of blend into their own. Maybe they choose X% of an equity model, X% of a fixed income model, and then a small piece of an alternatives model. Put that in 3 pieces of the same pie and kind of build their own blended model. We have advisors that do that too. There's no right or wrong way. We just want to make sure that you have the tools that you need at your disposal to be efficient. But for those, 5 risk profiles I mentioned earlier, I said the word cookie cutter, and I'd never like to say that because I don't want to make it seem like things are kind of one size fits all. But I like to say it from an approach of an advisor. It is fairly cookie cutter because it's a very simple approach to master. If you have a client that has a risk tolerance score that comes out to match conservative, they'd be put into maybe a First Trust conservative profile that would automatically blend them between equities, fixed income, alternatives, and cash. And that will be managed by a 20-person investment committee at First Trust, and they meet weekly. They typically trade quarterly, and that's all happening without you having to lift a finger. So from your standpoint, it's cookie cutter, but from a client experience standpoint, they are getting week-to-week assistance on their accounts, and that's just a service that you offer to them by being with a group like IAMS Wealth Management, using a group like First Trust. So I like to kind of touch on that a little bit to kind of just make the distinction that even though from a business functionality standpoint, I would call it cookie cutter, from the back end standpoint of the client experience, it's definitely not cookie cutter because they're getting very customized experience to their risk tolerance level. The second manager I want to talk about briefly is just Brookmont. They're one of our equity managers, and they are a little bit different than a group like First Trust, for instance, because First Trust, they like to use ETFs. They use some of their own actively managed ETFs. They're trying to get value in 2 levels. On the first level, they're trying to get value by making sure they're weighted into the proper ETFs that are appropriate for whatever market cycle we're in. And underlying that, obviously, they're managing the ETFs too, so they're trying to get the added value within the ETFs themselves, where a manager like Brookmont actually uses large cap equity stocks as part of their equity portfolio. So they're another manager that our advisors have access to, and they've been doing this for 29 years, and a lot of our advisors like using them. because as you can see from this chart, the snapshot I took from one of the fact sheets back a few quarters ago, you can see names that your clients and you as an advisor are probably familiar with, the McDonald's, the Home Depots, the Chevrons. And sometimes you'll have clients that like seeing familiar names on statements. Brookmont is a very, very good tool to help you use that. So maybe we have advisors that use this for the equity sleeve of a portfolio, and maybe use a different manager for a fixed income, or they maybe have a portfolio 100% in something like this because they know as part of the household, they maybe have 80% of their money in an annuity, for example, and this is meant to be their equity portion, their growth money, their fluctuating liquid money that they have. So going back again, I know I'm a broken record here, but there's not really a cookie cutter way to do it. It's really on a client by client, advisor by advisor basis and how you want to run your business. But this is more meant to give you an example of how you really can make this your own and put your fingerprints on being an advisor with IAMS Wealth Management. And the last manager I want to talk about is just Black Creek Capital, because they're a real estate manager that we use that gets our clients access to what is actually the third biggest asset category as far as US market cap that your clients likely have no exposure to. I mean, if you go to any endowment fund, pension fund across the country, they're going to have some sort of exposure to institutional level core real estate. Typically, it's anywhere between 5 to 15%. And that's just because it really doesn't correlate to the market. It's kind of a nice steady rock where, last year the market did bangbusters. Core real estate, wasn't a home run hitter, but it was never supposed to be. Same goes for the start of this year. A lot of people that are involved in equities have seen, lower the returns than they'd anticipate or hope for. But those clients who have some exposure to the commercial real estate that doesn't correlate to the market, it's not hitting a home run, but it's hitting a single or a double right now. And in a market like we're in, it's a pretty good story to tell clients. So it's a nice talking point. It's a nice steady eddy part of any portfolio. And I just like it from our advisor standpoint, is it's a talking point that they can use with prospects that they're likely not hearing from other agents or advisors. If you just drop the point that, on average, these pensions and endowments have 5 to 15% invested into it, Sally and Joe Smith, how much do you have invested? Well, I don't have any. Well, why has your current advisor not brought that up? How about we talk about how I can get you invested in a 10%, allocation that'll actually help you lower your volatility, where increasing the floor of your downside. And that's just a nice marketing conversation you can have to kind of acquire new clients. And I know I kind of breezed that quickly, but that's just one talking point that you have using just one of the managers on our platform. So if you kind of think about ways you can already help your sales process, that's an easy one to do here too. So with that, I know I've taken a good amount of your time already, about 40 minutes or so. I do want to get to some questions here, probably about hopefully a couple minutes worth. I know there are several coming in, so that's good. That means we're talking about stuff people want to be hearing about. So give me 1 second here. I'll try to read through a couple of these and then address them one by one. Excellent. Okay, so first question is kind of talking about what an office can look like in an investment advice standpoint. And that's a good question. So I'll kind of answer this broadly and eventually get to the specific question asked. So I think what the question's tying to is what does it look like as an investment advisor for me and my office and my team? We have advisors that might be one-man shops, and then it's a pretty simple standpoint that you can work under your own kind of business entity. You just simply offer securities through IAMS Wealth Management. And then we have some offices that have maybe a secretary or an assistant. Some offices have a partner, and some offices even have a 5 to 6 person staff. And I think the question was alluding to what can everyone handle responsibly from a compliance standpoint, licensing standpoint. So to offer any investment advice, you do need to be securities licensed. So to offer investment advice, you need a license. If you're looking to share investment advice, fee-based revenue with anyone, they have to be licensed. That's kind of the high-level look. If you're asking if maybe an assistant can help you fill out client forms or help maintain your CRM, things like that, they don't necessarily need to be licensed to do that. From a compliance standpoint, getting into our jargon, they would be what is considered an associated person. So we'd have them sign the same privacy policy and non-disclosure agreements that our advisors obviously sign from a compliance standpoint, that they're not going to share private client information just because they'll be privy to that. But they are able to do that as long as it's not an advisory function. So hopefully that answers that question at a high level. Some people are asking then some specific questions regarding the Series 65, and I did mention I would get to that question, so I'm glad that that was brought up again. So for anyone out there who's not securities licensed, that's kind of who I'm going to be speaking to in this response. But the Series 65 is simply kind of a investment advice law exam. So it's asking you a lot about the regulatory background of the different financial advisors acts that have kind of formulated what the investment advice industry is today. And then it gets into some technique questions and a little bit of the nitty gritty of actual investment accounts, talking about specifics like capital gains, qualified versus non-qualified, calls, puts, options, things like that. I think it's all good information to know, and it's all stuff that you need to know to pass the test. But it's not all stuff you will use ever on a daily basis with IAMS Wealth Management. I don't want to give anyone that impression, but it really is just meant to be a bar, that a threshold that is needed to be met to prove to the SEC and the industry as a whole that you've met the qualification and you're educated enough to tackle what being an investment advisor is. And that's kind of what the crux of the test is. So for advisors that are curious about what it takes, we have a third party a relationship with Kaplan. They're who I personally used. I'd say that's probably who 80% of our advisors have used to get that test passed. And they do have both self-study and live class options available. I'm certain that those live class options are kind of in I guess in kind of the question with the current situation we have going on, but we actually have seen an uptick, unsurprisingly, in recent weeks of people looking to study for the 65, because as many of you probably are right now, sitting there trying to think of ways to make the most and maximize the time that you have. So we have a lot of prospective advisors currently going through the self-study option, which is just reading a textbook. It's probably about 200 to 300 pages last time I saw. Taking self-study questions and just getting ready for that exam whenever the day comes and we can get back out in public, go to testing centers and get that accomplished. One question a lot of advisors ask is, what do I need to get on the exam? You just need to get a 72. So that's what I kind of tell advisors is, don't feel like you need to get an A on the test to pass. It's obviously good to do that. That means you have exemplary knowledge of the topics that you need to understand. But really, at the end of the day, as long as you get past the threshold of passing it through the IAMS Wealth Management training program and everything, we're going to get you up to speed on really everything you need to know about the nitty gritty of what our business and what your business will entail. So focus on that test, focus on passing that, and then we'll really educate you and coach you on the rest. So if there's any questions on the specifics of actually getting that taken, step one is going to be just getting that study material. Again, we use Kaplan, that's our recommended partner, but we have advisors out there that use others. Maybe I think Test Teachers is one that we've had a lot of people reach out to. Past Perfect is another one that I think is industry prevalent. So there's different things like that you could be using at your disposal, but no right or wrong reason. Just I think whatever one you're most comfortable with and feel you have the best chance of mastering to pass that test, that'd be the one I'd go with. So now is as good a time as any to kind of put your head in a book and make the most of what you're talking about. I think a lot that someone else brings up a good compliance point about kind of the filing and clerical systems, and that's a good point to bring up too. I don't want to make it seem like it's I don't want to pretend like I'm glossing over it too much. I mean, there's obviously compliance ramifications to the securities business, but it's a best practice and kind of recommended that if you're conducting insurance business and you're conducting investment advisory business, to really keep those client files separate, just because it's going to make your life easier, just from a management standpoint, being able to direct things this way or that way. But two, from a compliance standpoint, there's going to be times when either us as a firm, we just want to check out some of your records, make sure you're following our compliance manual, or whenever the day comes and the SEC comes through and asks our firm for information on 30 different accounts, and 2 to 3 of them could be one of you as an advisor. We want to make sure that you have all the documentation in place, but only the documentation in place that you need. So you don't want to be storing less than you need to, but you don't want to be storing more than you need to as well, if that makes sense. So hopefully that clears up some of that there too. I think one question here is kind of alluding to, what does IAMS maybe do better than their current firm? I can't, I'm reading kind of fast here, so I don't know if I'm talking about a RIA to RIA or a broker dealer to broker dealer, or broker dealer to RIA, pardon me, to kind of know what I'm talking about. But just at a high level, kind of when I'm having these basic entry level conversations with anyone that's maybe considering a switch, let's just say the first conversations with someone with a broker dealer, I think the first thing I like to talk about is cost. It's likely going to be a little bit more affordable for you to join a firm like IAMS Wealth Management, uh, just because at a firm level, you're on our firm's E&O. Uh, all the technology you need is kind of packed into our affiliation fee. So it's really probably saving you a little bit of that. You're not having to go out and get your own outside E&O. You're not having to pay for any outside technology, unless, of course, you want different technology than what we provide. And we do have some advisors that do some, but for someone looking just to do this kind of bare bones, what we have typically is satisfactory for that. From kind of a revenue standpoint, I mean, we don't have any sort of grid system here at an RIA standpoint. What the fee you charge is the fee you get. So it's not like you charge an investment fee. We take 75, 80% of it, depending on what your grid is, and pay you out the rest. We don't work in a grid format that's typically reserved for a broker-dealer kind of scope. And that same thing goes for your product sales. So for anyone that does investment advice and does annuity production, life production, is used to getting commissions through a broker dealer or having to even get approval on those products through a broker dealer. On the IAMS Wealth Management side, we consider that an outside business activity. Of course, you need to notate that you're doing that and that you're taking time to do that outside of the typical market hours, but that's listed in your disclosure documents from a compliance standpoint. We don't take any cut of that, so that gets paid out right to you. So that's usually a nice revenue gain for someone coming from a broker dealer side of things. And then the last point I typically make is just the oversight. I touched on it early, but broker dealers, those are under FINRA oversight. Their compliance department usually handles things a little bit different with that in mind. Whereas I don't want to say the RIA side is any less regulatory, any more lax on compliance. I just think it's kind of apples to oranges in some ways. So again, your oversight comes directly from our firm. It's our responsibility to make sure that our advisors are following our policies and procedures that are in place to follow the SEC guidelines. And then it's our duty to kind of report to the SEC and make sure we're in line with what they're requesting of us. So it's just a different dynamic, but that's something I bring up from someone who might be then asking that same question, but from another RIA standpoint. I would just ask the question of how you kind of run your business now. Do you typically manage your own portfolios or do you use third-party managers? Because I would say if you're really, at the end of the day, going to try to be a day-to-day stock picker, I don't know if our platform at its core function is really the best place for that. What it is the best place for is kind of getting to several of the points I made throughout the presentation, is just allowing you to really offset a lot of the necessary but time-consuming tasks of asset management to a group like IAMS and our institutional partners to allow you to do what is really your biggest revenue generating activity, which is getting in front of your clients, maintaining and retaining their assets while getting in front of prospects, adding new ones into the fold, and scaling your business likely in a way you couldn't do if you're trying to manage your own compliance, manage your own trading, manage your own billing, and so on down the list. So I think our biggest benefit there is just a scalability standpoint. I don't want to say our performance is necessarily any better or worse than any others, just because it's in the eye of the beholder. It just depends on what you're looking for. We've had some models this year that have done actually really well in the face of adverse market conditions, but again, that's just because of the inherent rationale they have in their trading methodology. We've also had some that haven't done so well, and that's by no surprise to anyone who's using them, because they're meant to more correlate with different segments of the market, and when those segments maybe dip, that manager's going to dip. So again, it's a case-by-case scenario, so I don't want to say our performance is guaranteed to be better or worse than someone else's. I think that's in the eye of the beholder. I do think that our systems and our process and our team, though, is going to put anyone, whether you're fresh out of getting your 65 or transitioning from an existing advisory firm, I think all of our systems and team and platform in place is really designed to give you more scalability, more efficient back office business as you're working through one cohesive tool with one cohesive group that can help you with all aspects of your business. I think that's probably our biggest value add, is just that scalability we add for you to either go ahead and maybe take some more free time than you're used to, or double down on your own personal investment in your business, dedicate more time to add more assets, retain your clients, and kind of grow your business overall as you go down the line of looking to hopefully build value and offset that to whoever might take over your book someday. So I think for now, those are kind of the crux of the broad level questions, and I've already gone on almost 55 minutes to an hour here, so I don't want to take more time than we need to today. But I do appreciate everyone, again, taking time to sit with me and listen a little bit. Hopefully, if even if IAMS Wealth Management isn't necessarily a good fit, hopefully you've taken one or two good nuggets for how you can help your existing business grow, or how you can grow as a person or as a business manager during this difficult time that we're all going through. That to me would signify that this was, I guess, time well spent. So hopefully that's been something that you've experienced. But as we end things here, everyone, thank you again. Just make sure you're out there staying safe. If there's anything you ever need, reach out to our team on the wealth management side, or anyone on the life or annuity side. I know we are here for you. The business as usual, as best we can during these unprecedented times. So everyone, stay safe. Thank you, and have a great rest of your week. And we'll be talking soon.